Hi, I'm Joe Parcell with the University of Missouri's College of Ag, Food, and Natural Resources. I'm happy to be your host today on Take One for Ag. Joining me today is Dr. Scott Brown, Extension Associate Professor and Director of the Agricultural Markets Policy Group at the University of Missouri. Scott's joining me today to give us an update on the recently released FAPRI baseline outlook for the next 10 years. Scott's going to visit with us about dairy and livestock outlook. If you want to learn more, we'll invite you to join us on April 17th at the 6th Annual WOMAC Outlook Conference at the University of Missouri. That and the briefing book can be found at www.fapri.missouri.edu. So Scott, thanks for joining us today to talk a little bit about dairy and livestock outlook. So let's dig in. Let's talk a little bit about fed cattle prices and what they're looking like for the next year. Give us a little bit of an update next year and then beyond.
Yeah, I think when you look at where we're at for this year in terms of fed cattle prices, we currently project those to be about $3 lower than where we sat in 2018. That has a lot to do with just domestic supply growth as the cow herds continue to increase, creating an increase in slaughter numbers. So lower prices ahead. There are a few things that could certainly move us in a different direction, but that's much of what's at play here with larger supplies of beef in the marketplace today.
So let's move that down, kind of a notch down the value chain. What about feeder cattle price? How's that going to play for feeder cattle price? Are we going to see much of a response there to those lower fed cattle prices?
Yeah, so I do think we'll also see some lower feeder cattle prices. Of course, feed costs matter a lot in that discussion. We know corn prices have moved down here in the last few weeks. If you look at our long-term baseline, where we assume average weather, much of feed prices stay in very good historical context, lower prices. But in 2019, maybe a little lower feeder cattle prices. Worry a little bit about what's been happening this winter with, number one, a lot of calves on wheat pasture, but also then just how much we've slowed down fed cattle in the feed yard with some of the tough weather that we saw this winter. That may affect the demand for feeder cattle as well as these current inventory takes longer to get to a finished weight. So we'd expect, again, $3 to $5 lower feeder cattle prices for 2019 and maybe some recovery longer term. And I think that has a lot to do with what happens on the trade side of the equation for cattle markets.
Yeah, well thanks for that, because of course that feeder cattle industry is so important to specifically our home state here in Missouri. So let's transition over the hog side of things. In the news recently, the African swine fever, gotten a lot of headlines. We've seen any impact of that already on the markets in 2019, and what long-term impacts might that have with some of those herd health outbreaks over in China? So.
Yeah, it's certainly the big unknown. You know, some will describe African swine fever outbreak in China as a black swan event. It's so big. I've heard all kinds of estimates in terms of the potential impact on Chinese pork production for 2019 and really beyond. If you look at what's been happening in pork markets so far this year, we have in the last few weeks seen a very rapid run-up, especially in futures markets, as many in the United States expect larger exports of U.S. pork, some of that destined for China. But I remind us that we are going to see a situation in the United States where pork production will have expanded yet again in 2019 by roughly another 4%. So domestic supply is growing. You have this China ASF event going on that could be really a big demand boost. But if it doesn't turn out to be that way, I worry about barrel and gilt prices as we go through the remainder of 2019. They could be lower. If you look at the baseline, we talk about $3 lower barrel and gilt prices for 2019. That African swine fever event, I always say, I'm going to be really good after the fact of telling someone what that really means.
Yeah, so you know, speaking of hogs here, just been a lot of expansion on the processing side. We're going to be able to accommodate that 4% growth on the processing side?
Thank goodness, Joe, we have seen that growth in processing, or we would be answering no to that question. I don't think we're going to be, too close in terms of slaughter capacity issues in 2019. I think the biggest issue we see facing the processing industry is whether or not they have enough labor available for now what's the growing capacity of that side. Labor's been an issue. I think it'll continue to be an issue, but by and large, I don't think we'll see big slaughter capacity issues late this year.
Okay. So we're going to turn to the other part of this. We talked about livestock. Now we're going to switch over to dairy, which, dairy farmers, dairy farms in general have had some pretty tough string of years here leading up to 2019. What's that outlook showing that in the baseline that we're released this week? What's that look like for dairy farmers this year and beyond? Because they have a lot at stake here.
Yeah, so I think when you look at our baseline for 2019, number one, we'll say higher milk prices for 2019, somewhere 75 cents to $1 higher. Roughly a $17 U.S. all milk price would be our expectation for 2019. That has a lot to do with international markets and domestic supplies. It has been a terrible industry from a producer standpoint the last few years with low prices. We've seen an increase in the exodus of dairy farmers out of the U.S., yet domestic supplies keep increasing. We're really seeing quite a structural change unfolding, I think, on the supply side of the dairy industry as we see typically smaller producers leaving the industry, but yet enough larger producers replacing them that overall milk supplies continue to grow. 2019 is going to be another year of growth in milk supplies, and so we need strong export demand if we're going to talk about what's ultimately going to be roughly $1 higher all milk prices.
Wow. So I mean, we could probably go on for days with this kind of next question. New farm bill, dairy program benefits. Are those factoring in here to any of the baseline outlook there? So
absolutely. If you look at the new dairy provisions in the 2018 Farm Bill, so we now have what we call dairy margin coverage (DMC). The DMC program provides much better support, a much higher level of support than we had under the old margin protection program under the 2014 Farm Bill. It's going to cover a producer's first 5 million pounds of production history at fairly cheap premiums. So in some ways, some might describe it similar to crop insurance, but I think for those with 2 to 250 cow operations, they're going to find this a really good risk management tool. I like to remind us, though, that producers shouldn't depend on these payments every year. In fact, they want not to receive payments because when they don't receive payments, market prices are higher, and much of their revenue still comes from the marketplace. DMC is really supposed to be sitting there as a safety net, if you will. And the good thing about this is that safety net program is certainly higher under what we got in the 2018 Farm Bill, and I think dairy producers are going to find that a much more attractive alternative.
Yeah, that's some good news. I mean, we're kind of looking for that little bit of nugget of gold out there as a prospector in a big stream, so that's good. So, Scott, I want to thank you for joining us on this segment of Take One for Ag, and I want to thank our viewers for joining us. And finally, I could close by acknowledging our partners in FAPRI and AMAP here at the University of Missouri, and that's the United States Department of Agriculture with support from the Office of Chief Economist. So join us next time on the next segment of Take One for Ag.